As of mid-November 2024, crude oil prices are stabilising around $68 to $70 per barrel after recent volatility driven by increased US inventories and concerns over slower demand growth. The market remained under pressure from a strong US dollar, which has surged to a 4-month high following Trump's election victory and expectations of inflationary fiscal policies. Oil oversupply concerns still persist. The US dollar's strength, supported by Federal Reserve tightening expectations, is limiting oil price recovery given the inverse relationship between the two assets. G'day folks, welcome back to another update, and today we're covering US crude oil and the US dollar, and we first begin with the weekly, monthly and daily trends. Before we go any further, make sure you hit that like and subscribe button to support the channel. That'll be truly appreciated. So first off, on the monthly chart for US crude, you'll see here the CCI is still below its moving averages. It's been that way since the middle of the year with a bearish outlook at the moment. Likewise, the price is below its respective moving averages. On the weekly, likewise, it's all downhill for both the price and the CCI, so bearish momentum. There is no divergence to talk of at the moment. I'll keep an eye on that and let you know if anything develops. But on the daily, if I zoom into this one, you can see here it's approaching this key support at 64.80, and also the CCI is broken below its moving averages, likewise the price, so we may see it come down to this support area at the very least. And if it keeps obviously dropping below that support, we're going to see further declines obviously, but at the moment that's our initial support area to look out for. It did hit this key resistance previously at 87.14 back in May earlier this year, and it's been declining ever since, and it's hit that support once, and now it's approaching that support level a second time, as I said. If we go to the intraday charts, now if you're trading on the intraday like the 1 hour, as in this example, we trade in the direction of the daily predominantly. So if the CCI is below the moving averages, which it is, we take short trades only. Now you'll notice here I've got the CCI on the hourly as well, and you would have taken a short position back here on that point there. So you'll notice here when the CCI breaks below the moving average band there, and also below the price moving averages, you would have taken a short position and you close it out when it breaks into that moving average range of the CCI. Now you'll notice that is right near the bottom of that price range, and you would have got out one of those candles there on the hourly. If you wait till the price breaks above the moving average range of the price chart, you'll notice there, for example, had you entered there, you would have been almost a break-even point if it entered the price moving average. That's why I prefer to take close the entries when they enter that CCI moving average. Likewise, when it broke below there on the CCI and also the price, you would have closed it out right at the bottom there on that candle, as we probably on that green candle there actually, and you would have got out near the bottom there as well with a few more pips to your credit. So this is the US dollar. Again, we start with the trends on the monthly, weekly and daily. It's doing the opposite basically to the US crude price. See here on the monthly, first off, it's broken the fresh breakout above the moving average band of the CCI, and also the price is broken above its respective moving average. Now, if I zoom into the US dollar for a minute, you'll notice here we had a bearish divergence, a very long-term bearish divergence between those highs. That high there is lower than that high on the CCI versus higher highs on the price. And we take the Fibonacci range back to the previous low before that divergence started, which was that point there. And our initial and minimum target range is at 23-38% level, which is highlighted with that rectangle. And you can see there, it's actually been fluctuating in that range for a number of years actually. And it looks like it's finally trying to break out through that range at the moment on the monthly. So that's a very long-term monthly. It's hit its divergence on the monthly range. Now on the weekly chart, there is no divergence that I can see at the moment. Or the CCI, when the CCI generally trends in the same direction as the price chart, there's no divergence to talk of. So let's look at this. That's basically broken above the moving average range, and it's making further highs. No sign yet of on the weekly of a pullback. On the daily, however, I have drawn this key resistance up here at 10.676. It's hit it a couple of times, came close there as well, and now it's moving, potentially retracing back from that resistance level. The CCI is still above its moving average range, although it's weakening, so just be aware of that. You can go long, but just be very careful about going long, and I'll show you the hourly chart in a second. Before we go there, I have highlighted here some rectangles which where the 23-38% target range was. Now I've got a very small bearish divergence there, a double top there on the CCI versus higher highs on the price, and that was our initial target. It came close to it there, then it finally broke in to the target range there, and it fell almost down to the 100% retrace level on that one. There was another bearish divergence here, lower highs on the CCI versus a double top on the price. It broke down, hit our target range, and this one came down to about the 50% retrace level of that Fibonacci range. And more recently, we had a bullish divergence here, higher lows versus lower lows on the price, broke up, penetrated right through that 23-38% range, and that would have been between that bottom and that high there. And it's gone well beyond 100% retrace level. So again, there's no divergence as we speak on the daily. Now, if we go to the hourly, I've got the daily here as a reference. You only take long trades on the hourly in the same direction as the daily. So you would have taken those long trades there where they were highlighted green along those points where the CCI breaks above the moving average, and so does the price. So that would have been one entry point there. You would have avoided that one because that hasn't broken up through that moving average range. So you would have gone long on that one. Closed it out when the CCI touches that moving average range near the top there. Let me just zoom in a bit on this one. Enter another long position there on that candle and close it out when the CCI touches its moving average range near the top there. Now, notice the price remains above the moving averages. You can hold it on that moving average range, but I find normally the CCI gives you an early warning and near the peak of the highs in this case. Sometimes when you do follow only the price chart break to the downside, moving into that moving average range, you'll notice here, for example, back here, had you entered long on that one there, you would have got out right on that red candle there. Now in this case, it broke up again on that green candle, and you would have got out maybe with a small stop loss or a break even on that candle there. Yes, you could have held it until it broke into that moving average range, but sometimes that takes a bit of time to reach that moving average, and there's a bit of a lag, which means you lose some profitability. So I find the break into the moving average of the CCI more reliable. So again, only take long trades in the direction of the daily if you're trading on the hourly or the intraday. Now at the moment, there was a false break there on the hourly for going long. You don't take short trades. It's a very narrow moving average range, so just wait for it to break to the upside again before going long. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.